Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Minute for Monday, June 21st, 2021. We hope all the dads had a very happy Father's Day. I know I certainly had a great day yesterday. So let's talk about what we're looking for this week in the markets, right? We're coming on the heels of the Federal Reserve press conference last Wednesday where we heard from the Fed's Jerome Powell, and there was really not much change in the underlying message, but investors are trying to read through some of the finer points of his speech, some of the nuances in some of the things he said, and the market walked away with an impression that the Fed may raise rates sooner than expected. Now, for context here, this is really a debate about whether rates will rise in 2022 or 2023. 2021 is completely off the table, and the other component that they discussed was what they called tapering the monthly asset purchases. So one of the things that the Fed does that most folks don't know about is they go into the bond market every month. They buy about $120 billion worth of mortgage bonds. And what this does is it creates demand and it keeps rates low. Now at some point they're going to start to taper those purchases, right? Not remove them entirely, just start to slow them down. So that was another discussion point from the Fed's meeting. And again, anytime the Fed speaks, the market really has a little bit of unease and anxiety. And we saw the market trend lower in the back half of last week. Dow Jones being the main index, leading us lower, as a lot of those components in that index are very interest rate sensitive. So fast forward to today, markets are on an upbeat note. We have a big move across the board. All three indexes much higher to start the week. So what has changed? Sometimes it just takes a couple days for the market to sift through the data and some of the Fed speak and actually determine what direction they're really going. And I think as people take a step back, they look at the Fed and say, you know what? They're really not tightening monetary policy anytime soon. They're still going to continue to provide support, and that is good for the markets. The bond market would agree with that, as we're seeing the 10-year yield continuing to back off. And if the market thought rates were going higher, the 10-year yield would be moving higher as well. Some other things to note this week: the Dow obviously all 5 days lower last week, so looking to bounce back from that. We're going to have Prime Day this week for Amazon, which we look at Amazon Prime Day as a good read on the U.S. retail market, the U.S. consumer. What type of money are they spending on non-discretionary items? So that's something we're very interested to see as well. So again, we're coming into the end of the quarter, right? This is the end of the second quarter. It is not uncommon to see some volatility in the markets in the last couple days of a quarter as portfolio managers and the likes, people like us, start to reposition some of their investment portfolios, looking ahead to the third quarter at what the prevalent themes may be. So volatility is welcomed. It's not here to scare us away. We see it as an opportunity, and we expect to see some over the next couple days. Volumes also get a little light as we move towards the 4th of July, as there's less people in the offices in Wall Street, so that's something to watch out for as well. If you have any questions, reach out to us. We're always here to talk with you about the things that matter with your money. We thank you for tuning in. We hope you have a great Monday, and we'll see you back on Friday for the Heritage Market Pulse.